than me.
My chair must be taller than yours. Don't do that. Oh my goodness. Hi, everybody. Welcome to Finance Friday. My name is Beth Henchesmore, and this is,
Stephen Harrington.
yes, and we're here to help teach you how to grow, protect, and maintain your wealth. Amy is off today, not off from the office, but she's off from Finance Friday today. So I brought this up, this idea, because when I've talked to people here this last week, what I found was this last week when I'm talking to people in a community and people that are new to Nova Wealth is that they don't have a plan.
Mhm.
So how do they know? How do you know if you're on track financially? Like that's a big question. That's like saying, Stephen, I'm going to move to Texas. By the way, my husband wants to move to Texas. I'm going to move to Texas. I know. And I'm just going to take a dart and I'm going to throw it at the state of Texas. And we're just going to pick a place. We're going to move there.
That's how we moved to Florida.
Okay, you're not helping. So that might work when other, but if you're in retirement and
That's not a plan.
it's not a plan. And the same thing with when you're buying a house, you just don't go on to realtor.com or Zillow or find somebody you know and say, just buy a house,
Mhm.
any house. I don't care. I just need a house. Like that doesn't happen. There's usually some elements of planning. And I think people, when they think about being financially on track, they've watched their portfolio, they've watched their 401ks, they've watched their IRAs, their pension, whatever they might have. But how do they know? How do you,
And
how would you tell somebody that they know?
I think it's different on where you are in that process, like where you are in life, because like the planning process, and if you know you're on track, is different in your working years than when you're fully retired.
Right.
So for everyone that I have that's still in their working years, the way we know we're on track is we do a bunch of different scenario plannings. Say, if I were to retire at 65, what does retirement look like for
Okay.
me? If I were to delay that 2 years and retire at 67, what does that look like? Or same thing, I retire at 65, but now I'm delaying Social Security a couple years. How does that impact my plan? So there's a lot of different types of scenarios to see if you're on track leading up to retirement. And then what I've found is there's a big mindset shift once people retire. Like most people can handle volatility while they're working because the market's down.
Right.
I'm working, I can
time.
replenish this, I've got time.
I got time.
But then it's different when we hit retirement and we don't have that money coming in and we see that big market downturn. That first time that happens while you're in retirement, a lot of people are like, oh, go to cash. Okay, well, here's what happens when that happens. So the planning changes based on if you're in retirement or not. And I had a mentor from a previous firm I was at. It had a really good saying. He said, we manage assets for our clients, of course, but more so than just managing a portfolio of assets, we manage a portfolio of goals. And that really resonated with me is, yeah, we can manage the assets, but I need to have a goal. Like I want to be able to leave this much for my beneficiaries.
Okay.
Are we on track for that? So yeah, that's kind of a long-winded answer, but
So it's not really about, we're based in Southwest Florida. That's our main headquarters. That's where we're coming to you live from. But we also work in Dallas. That's also part of why my husband thinks that that's a great spot for us to be. Anyway, and I think it's easy in some parts of the country, and Southwest Florida is one of them, is that you just see a lot of different versions of what looks like, what a great retirement looks like. And I think it's important for people to remember, like, you don't have to be ahead of anybody else or even behind anybody else. You just have to be aligned with your own plans. Like Stephen was talking about, everybody's retirement is going to look differently. So your plan is not going to look like somebody else's in what works for you. So don't be worried about that. But
compare
again,
yourself to others.
yeah, don't compare yourself to others, but you don't have to hit somebody else's number. It's building that plan that supports your life. And you can't just throw a dart at it. And lately, we talk about this a lot. In the last several years, anybody could do well in the stock market. We just keep hitting these all-time highs. All-time highs, definitely with all-time highs. And nobody, I shouldn't say nobody, that's an unfair statement. But if they didn't have a plan for when we do eventually see a market correction or we do see a pullback,
Mhm.
especially if they're in their retirement years, like you were talking about, you're gonna,
You need those, I call them the if-then statements.
okay, yeah,
If the market pulls back 10%, then here's how we rebalance the portfolio. And if the market pulls back 20%, then we do this. And it's all with a goal in mind, is that end goal of retirement. I've got some clients who want to retire with $0. Like they just want to spend all their money,
oh,
right? And
got it.
by the end of their life.
Oh, by the end of their life.
By the end of their life. Not, yeah, they
was
want to
like,
retire and have zero in
how
assets.
does
No,
that work?
sorry, when they pass, so throughout retirement, they want to spend all their money. Those goals look different. We got to really spend down.
Yeah.
If you have a goal of wanting to leave a legacy for your family, then maybe we need to carve out a portion of your assets, have that be more growth oriented,
Right.
more so than what is right for a 70-year-old or a 75-year-old. We might portion out some assets and put it in a growth asset, but there's a goal for it. There's a reason why we're invested the way we are. So it all depends on what your goals are, what your plans are. That's how we need to allocate those
So
funds.
to summarize, it just depends where people are. How do you know you're on track financially? How do you know? Is that you need to be meeting with your advisor, even if you are in working years and not retired yet, and have an idea. And obviously, retirement plans change. Go ahead.
I just had something pop in my head.
Go
So this sometimes goals of people are to minimize their tax liability throughout retirement, and you know they'll maybe they're someone who's thinking of coming over to Nova. They've got a previous advisor they're working with, and they've got this goal. And I'm like, oh, did you communicate this goal to your advisor? And they're, oh, no, we did
Oh, they did?
communicate it.
Oh, they did? Okay.
But then they hand me the statements, and they're invested in the same portfolios in their trust account, in their
Oh, yeah,
IRA,
we've seen
in
that.
their Roth, and they're invested the same in every
Every
single
account.
account. And that advisor was not positioning assets the right way. Your Roth should be more growth oriented.
Right.
Your IRA should be, traditional IRA should be more balanced. And then your trust should be maybe a little more conservative than that. But everyone is different in their situation. So a lot of clients communicate their goals to their advisors, but they're really not following through on it.
So how would they even know how would, okay, so we've got people out here who are all over the country.
Mhm.
And even though we service people throughout the country, the goal of this show is always to make sure that we can give people tidbits of what they need to do and maybe things they need to ask. How would you ask your advisor to show me that they're on track? How do
So
you do that?
I would go to the advisor and say, what do you think my goals are? And see
Okay.
if they can even
Okay.
answer that.
Okay.
And if they were to say, well, your goal is to leave this kind of inheritance for your beneficiaries, you want to minimize taxes along the way. And if they answer like that, then the next question would be like, okay, show me in my assets that goal being employed
Okay.
or administer that goal. Well, okay, here's how we're doing. You said you want to leave $200,000 to your grandkids.
Okay.
Oh, one way to do that is through the Roth IRA, because you're
Okay.
more than likely not going to use it. So here's why we're in growth assets
Okay.
within the Roth. So we've carved this out. So if they can explain why we're in certain positions in accounts, then they're really, they're really listening to your goals.
Okay. Because, and this happens, I think, in every profession. Everybody has a Monday morning quarterback. Everybody has access now to AI options, Grok, ChatGPT, all these different things that you can use that have AI backing to them. So everybody's become like an overnight expert, which is super helpful when you need data crunched. AI is very, very helpful with that. It's not so great with like, we found it to be wrong when we were searching out, what was it, the big beautiful
The big
bill?
tax bill.
Yeah, when we were looking at that. So you can chat GPT this or however you want to look in AI, but that doesn't replace a human. maybe at some point it will. But
Yeah.
I don't, I
I-
don't think it will.
I went on ChatGPT and I
Mhm.
said, show me the perfect form for a push-up. And it showed me. And so I felt like I did a push-up after that, even though I didn't.
Because it showed you
It could show you the plan, but the execution
the
of the plan is
execution.
more important.
Okay. I mean, we had this recently, even in my personal life, we had to have a car repair done. And the question that was asked by a family member of mine was, well, how do we know they're not just charging us more, just adding to the bill? And I'm going, this person's a professional. They deal with it every day. Like, and then they were consulting, Google for an answer. I'm like, that doesn't replace an expert. You either trust the person or you don't.
Right.
And I find a lot too, when I'm talking with people, is that they got a guy or they got a girl and they've known him forever and they've been wonderful. And we are not here to make you break up with anybody. Only here to make sure that you know what to ask, to make sure that person that's been working for you for 10 years, 20 years, 30 years, your whole family for eternity, that they're actually working for you. They're not just holding your money. I made something here last week. We talked about volatility in the market and how do you make sure your advisor is not just saying, relax, the
Yeah.
market comes back, it's fine. Everything's
We'll be
fine until
fine.
it's not. Everything's fine until it's not. I digress. So we want to make sure that you go ahead. I'm sorry.
So I was just going to say, we should really have a plan, like a volatility plan, I guess we can call it. Like when the market goes down, we have people come to us. They're worried, right? Mostly see it from prospects. We don't really see it too much from
Our current
current
clients.
clients. But when we see the volatility and when we do our reviews and they're like, oh, just a lot going on in the world. Oh, yeah, let's look at your plan and see how
How
all
it's
this
doing.
volatility has affected your plan.
Okay.
Oh, we're still on track for
Okay.
for what you said you wanted as a goal. So
We
yeah,
want to
it's
make
just
sure
have that plan.
first of all, that on track doesn't mean a number. It doesn't. Retirement looks different for everybody. Personal life goals, everything is different for everybody. So you don't have to match anybody else. Your cash flow is going to be different than your investments. So that's where we're talking about that plan comes into place. That even in times of volatility, you've got that plan so you keep having that cash flow. And also don't compare yourself. Don't. And social media is the ultimate comparison thief. We see what other people are doing, what they're driving, where they're vacationing, whatever it is, you see this
Only the good
image.
things.
Yeah.
And I see it a lot with people bragging about their investments too. They only tell you about their winners. They don't tell you about their losers. So
right. So
if your portfolio is going up like this and you hear everyone else is going like this, it's probably not the reality.
We've gotten those calls too, where somebody's like, "Hey, their portfolio's gone up X amount of percentage. Why didn't mine?"
It's like, oh, did you know they were down 30% last year and you were down 5%?
Yours isn't the same as theirs. I don't know. I always found that puzzling.
Yeah.
It's not the same. Their portfolio just isn't the same. Anyway, getting close to the end of our 15 minutes. Anything else you'd like to add?
I don't think so. It's just, well, yes. Okay.
Okay.
If you have not articulated your goals to your advisor, you need to. We don't know how to manage assets unless we know what the end goal is.
Yeah, and if your advisor is afraid to answer that question,
That's
or
not
they
good.
dodge it, or they gaslight you to basically be like, "Oh yeah, it's fine."
Or,
Morning,
yeah.
waving the flag.
Come and see us.
No, it's time to investigate something else because
Yeah.
they're not listening to you. And like, you wouldn't tolerate a doctor who doesn't listen to you, or a therapist who doesn't listen to you, or anything, any part of your life. Like, people need to listen to you and take your concerns seriously.
I think so.
Anything else from you?
I'm good.
Because my last two pieces are, if you're in the financial industry and you feel a little handcuffed by where you're working, that you can't quite plan for people the way you'd like to do it, or it's just not a good place to work. We're a great place to work. And
Got a good culture here.
well, I say that because I was with them for 5 years, took a little sabbatical to be closer to my kids. I switched professions even, and I came back. So that's, I think, should say a lot about the culture and the quality that we are here.
Absolutely.
So we're always open to working with great people. So if you're interested, even if you're not sure if you're interested, you just want to have a conversation, reach out to us. That's the first thing. The second thing is we wear red on Fridays because we remember everyone deployed. I
Why
did that
drink
one.
up?
I did that one day on a Friday. I held up my can because it was red. Obviously, a lot of international tensions right now, and regardless if there's tensions or not, we will have military families and military members stationed throughout the globe. And when your loved one is not down the street or working on something that you can't get to them, whether they're military or they're even first responder, that's a whole different level of stress. So we stand with our first responders and our military families by wearing red every day. And I have an unfair advantage because it's my favorite color.
Beautiful.
I know. Anyway, that's it. As a reminder, next Friday, the stock market is closed. So Nova Wealth Management is closed as well. You'll probably find that a lot of places are closed. It is Good Friday, but that also does close the stock market for it. So we'll be open on Thursday and open next Monday as well. I'll probably stick a replay on here for Finance Friday. So thanks everybody so much for joining us. As always, send us your recommendations of what you'd like to see because we want to make this show for you. Have a great weekend. Bye.
Bye-bye.